So we do some due diligence on the sponsor themselves, just to make sure, that they look legitimate. I mean, obviously, we don't want to give access to our club to someone that we can tell is going to try to take advantage of people.
Mm-hmm.
But, but in general, it's, we'll put it in front of the club and see what people decide. And so, and that's where the club works. So basically it goes in front of the club and people start asking questions. So, and it's a very powerful thing. Like I said, with that many people, they can very quickly surface, problems and issues like that. And, so ask certain rounds of questions and just kind of go from there.
Welcome back, everybody, to another exciting episode of the Richer Geek. Very happy to have on Ian Ippolito. He's the founder and head of, it's very exciting. It's an alternative asset investing club, and it's for the private investors, and we're going to dive into it. I'm excited. I think that our listeners are really going to, dig this. How you doing, Ian? Let's jump right into it.
Yeah, I'm doing great. How about you?
Doing fine. Where are you located?
So I'm in Tampa, Florida.
Oh, well, okay. I don't feel sorry for you. I like making fun of the Northeasters, and I'm in Scottsdale, so it's.
Okay. Well, it's pretty good there and pretty good here. We really can't complain.
Yeah, whether or not you want cactus or the ocean for your view, I guess.
That's right.
I love Tampa. It's a great place. So you are, if I'm not misinformed, you were in tech?
Yes, that's right. So originally I was an entrepreneur. Well, actually, originally I was a programmer, and so started off doing that, and then kind of wanted to start my own business. So I started a company. It was called Rent-A-Coder. It eventually became VWorker, but was a way for programmers to do work on the internet and for people to hire programmers on the internet originally, and then kind of expanded into working into like all sorts of remote work, like writing and translation and legal work and stuff like that. And, had my exit from that. And that's kind of what transitioned me into my new world, of investing and things like that.
Yeah. And this is, to me, extremely exciting. It's a concept that I haven't heard of because, and we'll get into it a little bit later, but you're actually investing in the different type of alternative things that I didn't even know you could, but before we get into the exciting meat, it's a little teaser, everyone. What is the Private Investor Club?
So what it is so I told you, I had this company that it did well and I sold it. And so now it was time for me to figure out, how do I invest my money? And the traditional advice was just to go out there and buy a certain amount of stocks and a certain amount of bonds. And, I didn't really feel comfortable with that. Mm-hmm. So, and at the time, real estate crowdfunding had just started to become popular. There were all these websites out there where you could invest in real estate, but it was really hard to figure out, which ones do I want to put my money into? They all say they're awesome. So, so I basically did a whole bunch of research. I spent a couple months. I hired an assistant, and we dug into all these individual websites. We interviewed different investors in them to see who liked them and who didn't. And so I had all this analysis for me to invest in. And the word kind of got out that I had created all this. And so people started asking me, hey, Ian, can I get a copy of that? Can I get a copy of that? And I got tired of everyone asking me for a copy of it at one point, and then said, look, it's going to be a website. I just put it all out there on the website, and you can go and grab it. So it became this website called the Real Estate Crowdfunding Review. And even today, it still gets, probably about 16,000 people coming in every single month to look at stuff about real estate crowdfunding. Oh. But what I realized is I really wanted a place where, so it's great. I love that. But I wanted a place where I could talk privately about deals, or I could source deals, because, a lot of times it's hard to find a good deal. So a place where, people could cooperate together to find good deals. We could talk privately and do due diligence on them, because maybe I don't know how to really dig into this particular type of deal, but there's going to be somebody else who does. So collaboratively, the idea was to be able to do that. And then sometimes be able to aggregate enough money to bring something significant to a sponsor and get a good discount where individually I wouldn't be able to myself. So that's how the club got started. And that's what it is. And it's grown like crazy. It was over 4,500 members, 8.7 billion in investable assets. Actually, we just went over 5,000 just recently. So it's just growing like crazy and doing well.
Yeah, that's wow. That's fantastic. Now, are you on both sides? Do you have people that want to put money, invest with you, but do you also bring in the sponsors, or are the types of deals that you're doing with, is it something that if someone's listening that wants to do a syndication or a fund, they can approach you on the sponsor side also?
Yeah, that's the way it works. So basically, the club itself does not run any syndications or things like that. Mm-hmm. It's a place for investors to invest passively. Mm-hmm. And so we take deals from wherever we can find them. We take them from the crowdfunding sites. We have, like you're talking about, individual syndicators that come and they have certain deals. We'll look at those. And there are just club members who are like, hey, I ran into this deal, and they'll put it out there. So we look at all of those things together, and that's how we find our deals.
Wonderful. And on the investor side, accredited only, what is your requirements and minimum?
Yeah, it is accredited. In the past, it was not. And it just became that 99% of the offerings you have to be accredited to get into. So now it is accredited. And we actually have some offerings where someone's got to be accredited, and some where you have to be a qualified client, which is 2.1 million, and some we have to be a qualified purchaser, which is 5 million. So we have all these kind of levels of things that people can invest in, but the minimum is accredited.
Yeah, and that makes sense. With the syndications that I've done, it's, to me, how do I say it? The anxiety level goes down when I have accredited investors only. You kind of live and learn with those types of things. Now, on the investor side, we'll stay on that. Now, what has made me extremely interested and has piqued my curiosity is the types of off-platform investment types of deals that you deal with. I couldn't believe that litigation,
litigation finance you're probably talking about. Yeah, it's very interesting.
Yes, tell us about some of the very cool things that I can actually invest in. It's crazy.
Yeah. And most people don't realize these things exist because they are kind of esoteric or they're kind of strange, but litigation finance is one that I like. I mean, so the basic idea is, maybe that person has their real estate investments and their stock market investments, whatever they are, and they all have kind of their own cycles. Things go up, things go down. Mm-hmm. The nice thing about litigation finance is it's not really tied to any of these cycles. So that's the first thing. So basically what it is, it's this. So the very basic type of litigation finance is like purchasing a stake in a case. So it's a lawsuit. And the litigation funder can be on either side of the lawsuit, but typically, they are expecting the lawsuit to come out with some sort of benefit to them in the end. And if it does well, they're going to profit from it. If it does poorly, now this is the interesting part, because of the way the legal kind of arena works, you can't make a loan to a legal firm. It's not allowed. So they're not allowed to say, hey, well, if you lose, you still owe me the money. This is a loan. So it has to be structured in a way where if you lose, you don't get back any money. So there's that binary risk, right? If you invest in one of these, easily could go the wrong way. So there's things that are done to kind of mitigate that risk. So one is to invest in a lot of cases rather than one. And then they have other ones where what they'll do is, they'll say, well, if I lost this particular case, I still want the money that comes in from like these 10 other cases if they don't. Mm-hmm. So it's called so there's different ways that they structure it. to make it a lot safer than that binary risk. But the advantage is just that it has nothing to do with the economy. It has nothing to do with the cycles. It has nothing to do with recessions. It's just picking. It's picking well. And if you pick well, then you do well. So that's the advantage. It's uncorrelated.
The loan is someone that it's not the law firm, but they're giving loans to people in order to have them afford the legal fees?
Well, you know what? There's multiple types, actually. So what I found interesting is it's done almost in it's got all sorts of ways. There's different types of law, and there's different ways of funding, like what you're talking about. The ones that we typically are looking at are usually funding the attorneys themselves. Maybe they wouldn't be able to. An example is this. Okay, say that there's been a large company that did something, that looks like a pretty strong case. They did something bad. Maybe they have a product that is hurting a lot of people, or, maybe it caused a lot of health problems or something. Well, that's a really huge company, right? So they've got a lot of resources, huge team. And then you have this lawyer who has a case that they believe, but they're just like a single law firm. A lot of these law firms are not actually very big. So how do they go up against that party? A lot of times they can't. And these big firms depend on that a lot of times. They're like, look, you don't have a chance. So, but instead, what that person can do is they can take it to a litigation funder and they go, well, this is actually a pretty good case if the person just had enough money to be able to go the distance with this big company. In fact, we think that like it's a slam dunk. So we'll go ahead and we'll finance that. And what they'll do is they'll set up like milestones. So they'll go, okay, well, here's the first step, where it's like a motion to dismiss is usually the first step, I guess. But I'm not an attorney, but I've learned all this stuff, which is basically, the other side will try to get them to throw it out of court. And so the motion for dismiss comes, and hey, it's still hanging in there. Okay, we'll give you a little bit more money. They get to the next step. Oh, okay, we'll give you a little bit more money. And so, as it goes higher and higher and higher, they're like, okay, and if it's gone all the way, they are fully funding that thing and feeling confident, that they hopefully can get a return.
Fantastic. That's amazing. I had no clue. Now, another one that I noticed that piqued my interest is royalties.
Yes. Music royalties. Something also I never really thought about it even a couple of years ago. Okay, so again, the idea here is very recession resistant. So it's like, if we think about what just happened with COVID-19, some companies did fine, other ones got hammered. But a lot of us were at home, and at home we were listening to music and we were watching movies that have music in them. So all those things are things that trigger music royalties. So every time you listen to music, or you're watching a video or a show and it's playing music, money is paid to whoever created that music. And a bunch of parties, actually, like the person who wrote the music, the person who performed the music. And you can participate in it in all sorts of different ways. So what's really cool about these music royalty investments is it's considered a very steady stream of income. Because like I said, it's like, people, even if times are bad, you kind of want to listen to your music no matter what, and maybe even especially when times are bad, you kind of want to listen to your music. So, it tends to be a steady stream of income. And you can kind of play it in different ways. You can kind of invest in like the hot hits, the latest, if you kind of feel you have a good feel for what's going to be coming out and what's going to be popular. Other ones will invest only in like the tried and true ones that have been, the iconic songs that have lasted for decades, and that everybody loves. That's another strategy that you can go with. So there's different kind of strategies to kind of play it, but that's the general idea.
Wow, I mean, it's amazing, and you have, of course, everyone. You have the tried and true, the real estate, private debt, private equity, the venture capital, and things like that. If the investors are like, I don't know about these things, let's kind of dip, let's kind of stay in like hotels, stay in things like that. Now on the sponsor side, for our listeners that are active in syndications and funds, let's talk about, with the sponsor, what is your requirements for me to bring a possible deal to you?
Yes. Well, what's interesting is it's such a wide club that I'm not the one that goes, you know what, I think this is a great deal, or I think this is a bad deal, because with a wide club, everyone's going to have a different opinion. There's going to be people with different risk tolerance. So it's like, I may say, I don't like this deal, but there might be someone else that goes, look, this is right exactly what I was looking for. So I don't go in and say, this deal is going to go in or it's not going to go in. Instead, so we do some due diligence on the sponsor themselves, just to make sure, that they look legitimate. I mean, obviously, we don't want to give access to our club to someone that we can tell is going to try to take advantage of people.
Mm-hmm.
But, but in general, it's, we'll put it in front of the club and see what people decide. And so, and that's where the club works. So basically it goes in front of the club and people start asking questions. So, and it's a very powerful thing. Like I said, with that many people, they can very, very quickly surface, problems and issues
Mm-hmm.
like that. And, so ask certain rounds of questions and just kind of go from there.
Mm. Okay. Yeah. That's, I did know, because there are similar clubs, but, the deal has to be at least 10 million or, 5 million.
Yeah. No, there's no requirement for that, like a minimum size or anything like that.
Is there a minimum to get into your platform on the investor side? Is there, you have to put at least $50,000 into, or do you, well, let's talk about, as we go through this, you just more and more these questions pop in. What does it take to get into the club on the investor side? How do I get involved?
Well, okay. So, yes. Yeah. So the main thing to be an investor, okay. So you understand the reason why. It's like, the most important thing is that we get honest discussion in the club. And we don't want sponsor A coming in and pretending they're an investor and bad mouthing sponsor B. Mm-hmm. And you know what I mean? And just messing it up. So rule number one actually is, anyone that's a sponsor, they cannot participate as an investor. We cut that all out. That way we know if an investor is talking about something, it's real. There's none of the backbiting and all that sort of stuff. Mm-hmm. So someone has to be an investor, so they can't be a sponsor to come in as on the investor side. And then they have to be an accredited investor. But as far as, having like a certain minimum amount, there's no minimum, because all the deals, there's so many. I mean, there's some that have a $1,000 minimum or a $500 minimum. There's not a lot, but there's a few. So, so we're not going to set, any sort of minimum. It's, whatever people are interested in, they can find.
And is there a fee to join? Is there royalties paid, or can you just sign up and start investing on the platform?
Yeah, there's no fee to join. There's no fees to be referred to the sponsors, and we don't charge the sponsors to bring the investors. So these are like really important things, and it's kind of weird because most clubs don't work that way.
Yeah.
So, but it's important because I retired, right? So I retired. My main goal is to be able to get good deals, and that's my goal. I want to help my own investments the best.
Yeah.
So. Right. So the best way to do that is to grow the club as big as possible. And that's why there's no fees or membership fees to join the club. And we don't say, oh, well, we're going to take a fee every single time we refer an investor over to a sponsor, which is the way most of them work, because then there's a little bit of a conflict of interest, because then we're like promoting certain sponsors. Mm-hmm. And we don't want to be in that position. We just want to be in a place where, everything is just like very transparent. Here's the information. If you want to go invest, that's great. If not, it's not like we're losing money. So, everyone understands what's going on. It's very transparent, no conflicts of interest. So we don't charge for any of those things.
Yeah, that's, I think that was an important thing to mention. And, I smile because it's such an entrepreneurial thing to say is, I'm creating this entire platform in order to help me find ways to invest, so I'm giggling. I'm like going, that's so awesome. It's so perfect. The things that I've done, it's just this podcast, I'm helping other people, but I'm also getting ideas myself. There's always with the entrepreneurial mind, there's some little bit of a selfish intent in a lot of things, but if you can help a lot of people, but also help yourself, then it's a win-win on everything,
Perfect.
every side. So yeah, I was giggling about that. Can someone, and this is going to be selfish on my part because I may want to do both sides, can someone be an investor and then stop being an investor and then go into being a sponsor, or is it all in on one or the other?
It's all in on one or the other. And basically, and we have people that will be like, you know what, hey, I was an investor, but now I'm doing syndications now. So I want to switch over. So we switch them over to a sponsor account. But they can't be both, just because it's too difficult to say, hey, I'm going to take off my sponsor hat. I'm going to put on my investor hat right now. And then we would have to like monitor people, and we don't want to have to do that. So we just keep it very clean, one or the other.
Okay. That makes sense. I wanted to know, because it's like, do I put my next hotel deal or another thing? But then I may want to invest in royalties, so I was like going, how can I do?
Yeah. Unfortunately, there's no way to do both.
Yeah, that's okay. Any other thing, you started this, I think I was looking in 2015, and it's really, I would say, just an organic way for passive investors. And if you're listening, everyone, I think most of our listeners are passive investors. It's a great way to go in, and now once you're a member, does it break down, okay, these are the royalty ones, are the different tabs, how is it, how can they browse and find, and how's it set, because I'm not a member, I don't see how it looks like inside. So I sign up today.
The biggest breakdown is by the type of investor, because like if you are accredited and you're not a qualified client, nothing's more annoying than seeing all the qualified client deals that you can't get into. So the first breakout is just basically by the type of investor that it's in. And there aren't too many breakouts as far as like categories, but people can do searches. So, and there's also like a feature where people can say, oh, well, what are the most popular things that other people are investing in? I just want to kind of check those out and kind of see, so they can do that. There's also like a page of specials. So it's like the sponsors that have given a special deal to the club. So a lot of people will start there when they're new and say, oh, well, hey, I'll at least look at what the specials are. So there's kind of several different ways that someone that's new can kind of get used to it. And it can be a lot at first, because there's a lot of deals out there.
Okay. And, to wrap up a little bit and let everyone know, it's 4,500 plus members, over 8.3 billion and counting in investable assets. I know that, you're getting noticed, because I think I was reading that you were featured in USA Today, Bloomberg, Wall Street Journal. So, everybody, this is not somebody that is just created a website and say, hey, let's rush something in. So, you're vetted and you're extremely experienced. How can people find you? What is the website?
The easiest way is to go right to privateinvestorclub.com. Or if someone wants to, they can actually go to that other site I was talking to you about, realestatecrowdfundingreview.com, but that's a big, long name. So probably privateinvestorclub.com is easier.
All right. And Ian, I appreciate your time. This has been wonderful. I think that everyone will be extremely excited to check this out. And, I'm going to have to make a big decision. It's like, okay, what side do I want to be on? But I appreciate the time, and thank you very much.
You're welcome. Thank you.